Mike Swanson here. Of course, there are many stocks now going up in the stock market. It's been quite a year, and August was an interesting month. But there's 5 stocks right now inside the Nasdaq 100 that I actually think are in big trouble. And let me show them to you. The first one probably doesn't shock you, so I'm not going to spend too much time speaking about it, and that's Tesla. Tesla has now got support. The April lows at 250. But I want you to take note of 2 things here. It's the on-balance volume indicator. That's the indicator below the price plot. On this chart, it's trending down. And that's a sign of distribution in the stock, because the way on-balance volume is calculated by taking, creating a running total of the up days, subtracting that by the down days using the volume. So if there's an up day and the stock trades $1 million of shares, that's an additional $1 million on balance volume. But then if there's a down day where there's more selling volume, on balance volume diminishes. And this has been going on since the high of June, but it's falling faster than the price of the stock. And that tends to be a troubling leading indicator. I know lots of bad news about Tesla, lots of doubts, in fact, of the long-term survival of the company. But on-balance volume is telling us that this distribution going on in the shares, that's bad. And Intel is also showing a negative sign in regards to relative strength. That's the bottom indicator on this chart. It takes the price of Intel, divides it by the price of the S&P 500. And it gives us a very simple comparison between the two. And this indicator is declining. It means the chart of the stock that we're analyzing is lagging the stock market. Stocks that lag the stock market tend to get hit hard when there's a stock market dip of any sort. This is telling us that Intel is now a danger stock in the market. When the stock market rallies, Intel doesn't go up as much as when the market goes up. And when the market declines, Intel is in danger. There's really no reason I see to trade Intel. There's plenty of other stocks doing much better, and those are the ones to focus on. And the next stock I want to show you is kind of a lesson of what these 2 indicators warn of when they both are pointing down. That is Electronic Arts. Electronic Arts took a big tumble following its July earnings report, really took people by surprise. And then for about a month, Intel went sideways, tried to recover. People are hoping it was a bottom, just like many, I believe, are hoping of Tesla now. And support was 125, but these indicators dove, continued lower, did not confirm the hopes of a bottom, and then last week price followed and dumped. In fact, we saw one of the biggest down volume days for Electronic Arts in the history of the stock. This shows you how these indicators, when they come together and warn, it pays to heed the warning. And here's a stock right now in which these 2 indicators are indeed giving us a huge, massive warning sign. This is Wynn Resorts, the big, famous casino company, lagging the market below the 150 and 200-day moving averages, and on-balance volume is rapidly declining, showing signs of huge distribution in this stock. I believe this is a stock that should be avoided, should be exited. In fact, even if you're in it, at least consider doing that. And people who want to trade stocks should avoid this one and look for the stronger stocks in the market. Of course, money can also be made betting against junk stocks. And when these indicators warn and the fundamentals are bad, those are stocks worth betting against, either with short selling or even targeted put options. And I want to show you a stock that's lining up to do this. This is Bookings Holdings. It's also in the Nasdaq 100. Relative strength in a sharp decline, but on-balance volume is starting to deteriorate too. This stock took a quick dump in August and is now bouncing. The indicator at the very top, the stochastics, is now above 80, signaling that the stock is actually overbought, that the bounce has brought the stock back up into an overbought condition with price below the 150 and 200-day moving average. This combination of indicators, bounce with an overbought reading, gives me what I call a dead cat bounce entry point to take a position in betting against the stock. I've got more details on this trading pattern and tactic in a PDF report I just sent you via email. So go to your email inbox now, check out the report. We'll go together in these markets together with more commentary, more trades, more videos. Glad you joined the email list, and I'll talk with you later.